It's no lie that the San Francisco real estate market is on fire right now in 2026. In this video, I'm gonna go over some things the headlines won't go over with you. The city's overall median price for sold homes went up to $2.15 million in 2026 so far. That's an 18% increase in price year over year. 85% of single family homes are selling for well over asking. And the average days on market just hit 29 days, which seems long to me. When evaluating all neighborhoods, that's the fastest days on market since spring of 2022 before interest rates increase to even below what they are now. And yet, some sellers are sitting on price cut listings for months, some even years. I'm Katie Pratt, and I have been in the San Francisco real estate market for over 15 years. In this video, I'm going to give you each category, and I'm going to show you an example of a home that has been either that is still in the market and is struggling, or took longer than the average days on market right now to sell. When we go into these different categories of listings, I'm going to explain to you months of inventory or months of supply, and how that metric is used to indicate whether or not we're in a seller's market, a buyer's market, and what's normal for San Francisco using that metric. Here's how MSI works. If no new listings hit the market today, how many months would it take for all existing inventory to disappear from the market, to be sold? Under 3 months, that's a seller's market. If it's over 6 months, then that's considered to be a buyer's market. In San Francisco, citywide, we're at 1.6 months of active inventory. But once you drill down certain property types, the numbers tell completely different stories. In short, single family homes have 0.8 months of inventory. Condos overall have 2.1 months of inventory. And then if we were to break these down into other categories we see in San Francisco, like tenancies in common, that number is TBD. I'll put it in the comments. And just so you can see how many listings there are right now, either condo, townhome, TIC, or detached in San Francisco, as of April 23rd, 2026, there are 871 listings that are currently on the market as active or back on market. And what I'm going to show you now is how many of them have been on the market for the longest time. So there's some that have been here for a couple of years, and I wonder if that's because they've been on since they were constructed. But as you can see, there are plenty that have been on for 6 months, 3 months. Not every neighborhood is named here, but various price points over the median of 29 days for all of the market and all asset types. So category number one, high-end or luxury condos, anywhere from 2 to 4 million with luxury HOA fees. While overall condo inventory has decreased 38% year over year, the luxury condo and townhome market inventory has increased. The citywide days on market average for all condos is 14 days, whereas for this category of home, we're seeing some listings sit between 45 to 60 days. I'm going to show you one here, which has been sitting for over 1 year. Going back to the point that the ones most struggling, even in more central locations, is between the $2 and $4 million range. This is tenancy in common. This is only a 2-bedroom, 2-bath, but it's over 2,000 square feet. It's been on the market for almost 70 days. Amazing views. Older building. 1925 building with a doorman, and the HOA is $3,300 per month. So this fits into another category. And this one is very interesting on Filbert Street because it is technically a condo, but it has a detached cottage that you could use for rental income. So not all the photos are loading here. This one's been on the market for 86 days. And here are some of the other photos I can show you. 2 bedrooms, 2 baths. And then it's a 1-bedroom, 1-bath cottage in the back, but again, a condo. And the HOA on that one is $519. That includes the common area maintenance, trash removal, and the water sewer. Struggling category number 2. And that's downtown condos with high HOAs. So anything north of market, south of market, Civic Center. I'm going to show you an example here. Let's check out this one on Bush Street for 1.8 million. 2-bedroom, 2 baths. HOA is $1,800 per month. It's been on the market for 100 days. That HOA includes management fee, security fee, not sure what else in that particular building. Let's look over here by Salesforce. High entry point, 3.5 million. 2021 newer construction was listed at 4.3. It's been on the market for 414 days. Completely redone. And the HOA is 3,024. This building has everything: clubhouse, gym, sauna. Sure, it has 24-hour door person, barbecue area, other amenities available. So this is what 3.5 million, 1,370 square foot, 2-bed, 2-bath. Total units in the building is 120. Let's do one more. This is on Fremont Street. It's a 2-bedroom, 2.5 bath for 1926 square feet. It was originally priced at 3.45, and they moved up to 4.1 after 210 days on market. Tons of city views, 67 units. That was built in 2018. The HOA is $4,400 per month. These aren't necessarily luxury condos, but anything under 2 million, even some of the studio units that I've seen that have higher HOAs, $800 a month and over, in a building with lots of amenities, are sitting for many days. 2019, the median HOA in a condo in San Francisco was around $319. In 2025, the median HOA price was over $500. Some of this has to do with insurance, some of it has to do with the age of the building and filling up the reserves so that the reserve is healthy. for capital improvements later on. But in many of these downtown high-rise buildings, the HOA fees can range anywhere from $800 to $1,500 per month for the HOAs or for this price point that I'm mentioning. At a $1,200 a month HOA alone, that's an additional $14,000 added to your expenses of owning that condo per year. Soma or South of Market condos in 2026 saw a median sold price drop of over 40% year over year. I'm not surprised that 2021, 2022 shifted demand towards more space and lower density neighborhoods, and that hurt downtown towers disproportionately. The average downtown condo is selling in 65 days versus the 14-day average I referenced earlier for all of San Francisco. Sellers, you absolutely have to price for the burden the HOA will bring to buyers. You have to also account for higher interest rates, since it's likely some of the folks who purchased during the peak were paying 3% interest rates versus the 6% to 6.5% now with conventional loans. Buyers run a full monthly cost calculation and check out the reserves of the HOA, the reserve study, to make sure there are no special assessments oncoming, and really weigh the benefit of whatever that HOA covers versus the cost of having that in a single family detached home somewhere maybe not as convenient. Weigh the convenience, price the convenience. Potentially struggling category number 3, and I say potentially because there are exceptions based on where this price point is located, the luxury segment above $3 million. So these homes, this one on Lake Street area and this one on Balboa, they look like fixtures occupied by owner. This one in the inner Richmond, so let's see, $5 million in Potrero. This one's been on the market for 27 days. It was listed at $6 million. It's already undergone a price reduction to $5 million, 3,600 square feet. It's had some renovations, modernization, city views, outdoor space, amazing windows, big open layouts. And that's appraisal that isn't on record for that amount of square footage. One that's just sitting a little bit longer than the average days on market for single family homes, 4.3 million. This one's only been on the market for 23 days in Pack Heights. Go can be a busy street, and that's also occupied by the owner. I've talked about some of the ways that people can access this type of financing, especially in San Francisco, or especially if you are employed at a pre-IPO'd company, a startup. So you're not necessarily at this price point dependent on financing. Sellers, of course, overpriced properties will sit for a long time. If you have an over-improved property for the neighborhood, you have the best home on the block, or your home as it's positioned on the block has factors like sunlight or noise or increased daily friction because there's no parking, these types of things can affect the marketability or desirability of your property. So you absolutely must price according to the last 6 to 12 months of sales, depending on inventory in your area, but follow that pricing strategy. For buyers, you might have more leverage here in this market. Longer contingency periods, inspection contingencies in any form are much more probable here than they are for any home price in the sub $1.5 million range. So struggling category number 4, this is totally dependent on the condition of the property and the location of the property. But between 1.5 and 2.5, that price range attracts a lot of buyers who are relying on conventional financing. This in 2026 might represent not just your first-time home buyer, but a move-up buyer range. There's quite an assumption made here, but many homeowners, I'm going to presume a percentage of them in San Francisco are millennials, are locked into a rate that's between 3 and 4%, maybe between 2.5 and 4% if they purchased between 2015 and 2022. So now, using that equity, if they purchased on the earlier end, trading up to a $2 million home at a 6.38% interest rate is not nearly as attractive. So you do have a percentage of current homeowners who choose not to move up. In San Francisco, I won't say that this range is exclusive to move-up buyers. There are first-time home buyers looking in this range. Know that entry-level, mid-tier homes, which very well could fall in this price range in San Francisco, depending on what neighborhood you're in, are seeing modest price growth, are receiving multiple offers. For sellers, again, realistic pricing, making renovations that give you a return on your investment because it's about presentation, staging, landscaping, exterior, interior paint. Those are all things that can help your property move more quickly off the market. You, again, must refer to the data. Look at the pictures of recently sold homes. Check out other open houses in your neighborhood for homes that are presented very nicely. For listed homes that are presented this way, you have a standard for listing your property. For buyers, I would say, depending on the starting price point, because there's plenty of properties I've seen listed at $1,098,000 and that have ended up in the 1.5 to 2.5 range. If you're able to purchase in the 1.9 to maybe 2.5 range and pricing is more transparent in that area, you might have more room for negotiation. You might be paying a much lower price per square foot as you edge into that higher price range territory, especially if the seller is still owner occupying. Actually, let me show you an example right now.
Well, it's contingent, and it is in an ideal competitive location on the Castro-Noe Valley border, and it looks like it's occupied by a tenant. That can be problematic if you're trying to owner occupy. And then one more is 913 Florida. That's Potrero Hill Intermission border. Okay, this one also listed at 1.55, 1553 square feet, has a decent sized yard. Looks like like it's been on the market for 73 days. It is a bit of a fixer, and it is occupied by the owner. So I'm seeing a theme here. It's not so much that move-up buyers don't want to find something in that range. It's just that the square footage that I'm seeing at that price point, it's not that they're unattractive neighborhoods by any means. They're competitive neighborhoods, but the conditions of these properties aren't matching the homes that are selling more rapidly in those areas.
Struggling category number 5, existing homes competing with new construction that's happening. I touched on this already when talking about Soma. There are also homes in the dog patch, homes that were built between not even 15 years ago, but are not old housing stock. District 9, there are over 165 condo units being constructed right now, and there are almost 3,000 entitled units in the pipeline. And what I mean by entitled, they're ready to build. How long will the building process take? 1 to 2 years, depends on the size of the project. I don't know if the 3,000 entitled units will be happening in phases, if it's the same developer, etc., etc. But the point is, buyers in the Bay, I've seen there's a mix of preferences, but when you're looking in these neighborhoods, Soma, Mission Bay, South Beach, the choice between new construction with the option of selecting upgrades, having more customization for your home instead of buying something that's existing, getting builder credits, getting special builder financing, all of those things are very appealing to someone who's considering existing housing or condo stock, loft stock, and this new construction that's happening in these areas.
This relates to units that were built between 2012, 2019 even. This one on 1515 15th Street is only a studio, very little square footage. This is all the common area, but here's the actual apartment, and it's one of the few units in this building that has a private terrace. I think 1 of 2, but for a studio unit post-pandemic, even though it's very close to the Mission, one of the BART stations, the HOA is $608 per month. So this price point isn't terrible for where your location is, but the square footage is really limited. Let's go for another price point. Let's do 50 Lansing. This has been on the market for 162 days and was built in 2002, close to these really busy corridors. It's 1 bed, 1.5 baths, has lots of amenities. Looks like it might be virtually staged, but it's still coming soon. So I'm curious as to why it's still coming soon. It's not even open to public viewings unless it's syndicated to the sites. The HOA is high. It's $1,000 per month. We're seeing these older housing stock condo units struggle because they're also smaller units with high HOAs. This one's outside of Civic Center. $898 was the original price. It's been on the market for 94 days. Very nice condition. It's also owner occupied. It has a lower HOA fee of $505, and this is built in 2022. It's not even a very old building.
For sellers, think about other value propositions of your building or your unit that maybe this new construction doesn't have. Do a little bit of due diligence or have your realtor due diligence. Your value proposition could be location specific, like you're 2 blocks closer to the ferry building or Caltrain. Maybe your developer created better floor plans, or maybe you made modifications within your floor plan that makes the house a layout that's more attractive to today's buyers. Yeah, I personally wish new construction had was including a bathtub. Maybe you added a bathtub in one of your bathrooms. For buyers, compare that existing housing stock with current interest rates and median sold price to the premium that you may pay for this new construction, their HOA fees, and whatever builder credits are offered to you. This is the number 1 reason that homes remain unsold in San Francisco or other parts of the Bay Area, and that's overpricing. Price reductions in San Francisco have fallen 39% since March 2025, and that's good news for sellers, but don't start at the top. Don't start in what I call an aspirational price. Look at the data and see where everyone else is pricing in your neighborhood for the condition your property is in before jumping to aspirational pricing. And again, you cannot anchor your pricing strategy to what 2021, 2022 pricing was. That doesn't mean that for a specific neighborhood, we aren't back to that type of craze, demand. Underpricing and moving to a transparent price is a much better strategy than starting too high. Sellers, price your home correctly using data from day 1. It's better to start low and have a multiple interest, multiple offer scenario with an offer due date than to start high and then undergo 60 days of price reductions. For buyers, when you see a listing with multiple price reductions and or a move to transparent pricing, that can represent opportunity for you if the seller's finally willing to be realistic.
Let's look at a few that are in our last category, which is they're overpriced for current condition and neighborhood. And this is going to be 1831 Silliman, and that's close to the Excelsior University Mound border. It's a big property on public records. Looks like it's a corner lot, not necessarily again upgraded and definitely not staged. page, it looks like it's owner occupied or tenant occupied, and it's occupied by a tenant. Originally priced at 1.65, now it's down to 1.5. And then another fun one that goes into a category I haven't mentioned, and that's 327 Brazil at 3 bedrooms, 1 bath, then 1340 square feet, listed at 998. It's been on the market for almost 70 days. So it looks like it's in relatively good condition, but again, some of the finishes are from, looks like the early 2000s. And it does look like it's owner occupied. Just so you can see, again, that's Excelsior. So a couple of factors here in all of these. Luxury in the outskirt neighborhoods between 2 and 3 million. They're overpriced for their current condition, regardless of where they are. They're entitled projects that only investors want to touch, and maybe they're overpriced for the cost of construction, even though they're entitled and ready to build on. And then, of course, all the condo situations that I've named before, either they're competing with new construction, they have high HOAs, especially for the unit size that you're going to get.
Now we're going to be navigating to the hot categories. Hot category number 1, well-located condos with outdoor space. So even if it's not exclusive use of a yard, you have a yard. Well-located condos could also mean something that maybe if it doesn't have its exclusive use of a backyard space is close to some of the major parks or green spaces in San Francisco. Condos, townhomes, TICs that have a balcony, a deck, again, either shared or exclusive use of a yard, are receiving multiple offers. A ground floor unit in the Mission with private yard space, and a Noe Valley top unit with a rooftop deck or balcony and views trade at a completely different premium than an interior unit in Soma with no immediate outdoor access. These types of condos could be sitting on a 2 to 3 month MSI. Still a seller's market, but well, it's more balanced in the single family home category. Hot category number 2, turnkey single family homes. This is where I've seen some absolute crazy competition in San Francisco. And instead of there being 3 to 4 offers per property, like I saw last year, some even 1 offer per property in these neighborhoods. Now in the spring market, I'm seeing 7 to 11 offers per property. So this includes Pack Heights, Noe Valley, Cole Valley, Bernal Heights, Forest Hill, Inner Richmond. The median sold price of a single family home in San Francisco in early 2026 was around $1.943. It's almost $2 million, and that was a 21% increase year over year. Average days on market is just 12 days, and the average sold price over asking is around 17%, with some neighborhoods posting overbids of $500,000 to $755,000 over list. I'm going to give you an example here. This is one of the ones I was referencing in the Inner Richmond district. Now, truly detached single family home inventory has always been limited in San Francisco. Right now, in April 2026, there are only 157 single family homes for sale. That is a nearly 38% decline from this time last year. And there's only 0.8 months of inventory, so it's an extremely competitive market. For sellers, if your home is, again, turnkey, staged, priced attractively, you are likely to receive multiple offers. For buyers, you would need to be approved for a jumbo loan based on this median price. Fannie Mae, Freddie Mac conventional loans wouldn't fly for these price points. Make sure you have your offer framework laid out before you even start looking. Hot category number 3, some neighborhoods adjacent to the AI corridor. SF Standard reported that properties adjacent to some of the new offices by OpenAI, Anthropic, Salesforce, and Uber are going under contract within days of being listed. Hot category number 4, which is really an overlap with one of the previously mentioned categories, and that's single family homes priced under 1.5 million, or well-priced homes under 1.5 million. Affordable in San Francisco, of course, is a relative term, but the sub $1.5 million segment is especially competitive because 20% down payment, you can use a Fannie Mae, Freddie Mac conventional loan for this type of asset. Properties priced between 1.2 and 1.5 million, or below 1 million and up to 5 million in transit accessible neighborhoods are consistently drawing multiple offers. And for context, median income for a dual income professional in SF makes a $1.2 million condo way more financially accessible than the 1.8 million plus single family home market. So for buyers, come in strong on price. You might not have the opportunity to participate in a multiple counter situation from the seller because there'll be so many offers. So make sure for homes you really love that you do submit highest and best. Clean terms, doing the due diligence, if there is any due diligence remaining from the disclosures and reports that are shared, is really crucial so you can come in without any type of contingency. For this price range, any type of hesitation will cost you the deal. Hot category number 1 might seem obvious, but it's just anything that is priced correctly or attractively in this San Francisco market. If this type of overbidding persists, if you decide to increase price, you might, as a seller, be battling the buyer psychology and trauma from losing out on multiple attempts at purchasing in this highly competitive market. So pay attention to pricing trends, pay attention to what types of preparation will procure that amount of interest or the amount of interest that you want to get the price that you want. Buyers last year's prices can't be considered comparables. Unfortunately, even comparables up until July, which I think in April 2026, we And we're at the 6-month mark where things started to heat up in San Francisco. Here's the bottom line. You can choose to be in either one of these lanes of looking for opportunity with value add for homes that, they have, based on my reviews, what's been sitting on the market can be opportunities for you. But that doesn't come without sweat equity. These generally don't come without some sort of compromise. If you're a seller, the hot segments are telling you exactly what you need to do. Pay attention to the properties that are going on market in your neighborhood right now, how they're staged, how they're prepped, how they're priced. If you're a condo seller, what are some advantages of my existing construction that might not be an amenity or something that can be changed in the new construction buildings? If this breakdown was helpful to you as a seller or a buyer, hit the subscribe button below. I cover the Bay Area market like this every week. If you are a potential buyer in San Francisco, you have the option of using the Bay Area Relocation Guide below, the neighborhood quiz for San Francisco. If you're a seller and you want the seller's guide for selling your home in San Francisco, that's also in the resources below.